NIO stock had a dramatic start to the new trading week. Early in Monday's session, the stock surged as high as $6.70, riding the wave of last week's breakout momentum. But by the end of the day, that strength had faded. NIO closed at $6.09, down about 25 cents on the session, a decline of nearly 4%. It was the kind of trading day that leaves investors asking, was this just normal profit-taking after such a strong run, or was something more at play? The truth is, there were several factors that contributed to Monday's swing, and most of them reflect the growing complexity of NIO's position in both US and Chinese markets. The short answer is that profit-taking was part of it, but arbitrage dynamics, ongoing product buzz, and broader market sentiment also shaped the day. To start with the most straightforward factor, profit-taking. On Friday, NIO stock had exploded higher, closing up nearly 15% at $6.34. That move came after 3 prior sessions above $5, marking the company's longest stretch above that level in over 6 months. For traders who bought in when the stock was languishing below $5 just a few weeks ago, Friday's close represented gains of over 20% in less than a week. That's the kind of performance that naturally prompts some investors to lock in profits. Monday's early rally to $6.70 created an attractive exit point for short-term players. After such a sharp rise, it's common to see selling pressure emerge as traders decide to take money off the table. That kind of selling doesn't necessarily reflect a negative view of the company's fundamentals. It's simply part of the ebb and flow of markets, especially in a stock as volatile as NIO. But profit-taking wasn't the whole story. Another major factor behind Monday's volatility was arbitrage activity between NIO's US-listed shares and its Hong Kong listing. Earlier in the day, NIO shares traded in Hong Kong jumped more than 15%, lifting the implied value of the US-traded ADRs to around $6.75. That created an arbitrage opportunity. Traders could buy in Hong Kong, sell in the US, or vice versa, to capture the price difference. Those dynamics contributed to NIO's strong open in New York but also to the later selling pressure that brought the stock back down. Arbitrage like this isn't uncommon for companies with multiple listings, but it can create outsized intraday swings. While profit-taking and arbitrage drove much of the price action, it's important to note that sentiment around NIO remains buoyed by product optimism. The company's updated ES8 SUV has been generating significant buzz since its unveiling. Positioned as a premium 3-row electric SUV, it's being compared directly to Tesla's Model Y. What's particularly interesting for investors is the pricing strategy. Under NIO's battery-as-a-service subscription plan, the ES8 comes in around $43,000, making it highly competitive in China's premium EV segment. That matters in a market where Tesla has been cutting prices to defend market share and where consumers are increasingly price-sensitive. Then there's the Onvo L90, NIO's new mass-market SUV that analysts are projecting could sell as many as 10,000 units per month by the fourth quarter. Considering NIO's current deliveries average between 20 and 30,000 cars a month, the L90 could represent a one-third boost to volumes. That's transformative if the company can execute, and it's one reason analysts like Citi and Macquarie have turned more bullish in recent weeks. While Monday's dip may have shaken some nerves, the underlying narrative of product-driven growth remains intact. At the same time, we can't ignore the broader market context. Monday wasn't a particularly strong day for US equities. Both the S&P 500 and the Dow Jones Industrial Average ended lower, as investors weighed the potential for economic softness and awaited further clarity from the Federation. Even though Jerome Powell's Jackson Hole speech last week was interpreted as dovish, with hints of a possible September rate cut, markets are still sensitive to every data release. For growth names like NIO, that macro backdrop can amplify moves in either direction. When sentiment turns risk off, stocks like NIO tend to feel it more sharply. So when you put it all together, Monday's action looks less like a negative reversal and more like a natural pullback after a period of strong gains, compounded by arbitrage flows and a touch of broader market weakness. Importantly, NIO still closed the day above $6. That's critical. The real test for the stock now is whether it can sustain this level and build a base above it. Last week, the story was about breaking through 5. This week, the focus is on whether 6 can hold as support. If NIO consolidates here, it strengthens the case for testing higher resistance levels, first at $6.50 and then at $7. If it slips back below 6, the risk is that the breakout looks less convincing. But even in that scenario, as long as 5 remains a firm support, the broader bullish thesis remains intact. Investors should also keep an eye on trading volume. Monday sessions saw heavy turnover, more than 150 million shares traded, which shows that the stock is firmly on traders' radars. Sustained volume around these levels suggests conviction, while a sharp drop-off in activity could make the stock more vulnerable to swings. Looking ahead, the catalysts for NIO are still clear. Delivery updates in September will be closely watched, as will any indications of ES8 pre-orders or ONVO momentum. Commentary from management, particularly around margins and infrastructure utilization, could also shape sentiment. And of course, macro drivers like US inflation data, Chinese consumer spending, and Fed policy will remain central to the story. For traders, the play remains around key levels. 6 is the line in the sand right now. For long-term investors, the focus is on whether NIO can translate its product buzz into sustained delivery growth and eventually profitability. The company is still unprofitable, still faces intense competition from BYD, Tesla, and XPeng, and still operates in a challenging macro environment. But it also has unique strengths in its battery swap network, brand positioning, and now a dual strategy of premium and mass market offerings. Monday's dip doesn't erase last week's breakout. If anything, it's a reminder of how volatile the journey will be. After a 15% surge on Friday, a nearly 4% pullback on Monday is part of the natural rhythm of trading. The important thing is that NIO remains above 6, and the underlying drivers of optimism, new products, analyst upgrades, and macro tailwinds are still in place. So to answer the original question, was Monday just profit-taking, or was there more to it? It was a mix. Profit-taking was real. Arbitrage dynamics between Hong Kong and US listings exaggerated the swings. Broader market weakness played a role. But underneath it all, the story for NIO remains one of renewed momentum. The company has a lot to prove, but for the first time in a long time, investors are giving it the chance. As we move deeper into the week, the challenge will be holding that $6 line. If NIO can defend it, the breakout story continues, and the path toward higher levels opens up. If it falters, the market may see this as a pause rather than a reversal. Either way, Monday's session was less about weakness and more about digestion after an extraordinary run.